Hello and welcome to Tax and Wasted by the Australian Taxpayers Alliance. I'm Emilio Garcia and I'm here with our policy director, Emily Dye. How are you? Nice to see you. And this is the first episode of the podcast where we'll have two hosts, not one. I'm excited. I don't know about you. Takes the pressure off of me.
Okay. We'll see how this dance goes. It'll be like us tripping over each other's feet and trying to figure out who's leading. It'll be entertaining.
No. We do have to start off on kind of a grim note because I made a bit of a boo-boo a couple of podcasts ago. So I said something about superannuation that wasn't correct. That both my accountant and you told me, like, why are you spreading this information about superannuation? Correct?
Yes, that did happen.
Okay, so what I said two episodes ago is that superannuation, the part of your income that goes into superannuation is taxed 3 times. Because all of your income is taxed at the same rate, then it is taxed on its way in, so when you deposit it, and then it's taxed on its way out when you withdraw. It turns out that's incorrect. The part of your wage that goes into superannuation is not taxed as taxable income when deposited. However, it is taxed on the way in and on the way out.
That's correct. So the superannuation guarantee that is going automatically from your employer into your superannuation fund is not taxed at the income tax rate, but there's a tax offset, so it's taxed at 15% when it goes in. The government considers this a tax cut. I say, why are we taxing our retirements anyway at all? You're not, and then when you pull your superannuation out, when you're ready to retire, the capital gains, the realized earnings on that superannuation fund are taxed at 15%.
Right.
The government, for some reason, considers this a tax offset. You're getting taxed less than we could be taxing you. But this is not consistent with how retirements are done internationally.
Well, yeah, because the idea behind the concept of superannuation is you put a little bit aside. That money is taxed differently, and so you're encouraged to prepare for your retirement, and that way you won't be a burden on the government, correct? That's more or less the idea. But here what we're doing is we're saying you're forced to put this money in, and we're going to tax that income pretty generously for the government.
Yeah. I think the real atrocious thing is that it's taxed on both ends. Mm-hmm. So if you go to other countries like the United States, they tax it on one end. So it's either taxed when you put it in, or it's taxed when you take it out, depending on whether you choose a 401k or an IRA plan.
Right. And here, obviously, well, I mean, Australia is a revenue state, so we're not surprised that they're actually just using this as an excuse to tax the living daylights out of their citizens. But that was not correct what I said, so apologies for that. And moving on from boo-boo, I think we can move on to something a little bit more interesting. So we have had now for quite some time our 5-step plan for the post-COVID economy in Australia. We said, what's happening with coronavirus in Australia is really tragic. Obviously, we're entering a recession for the first time in a very long time. But there is also some opportunity to undo some structural issues, especially as it relates to tax and regulation and waste. And so we put out that plan, hoping that we could make a difference for the good, considering the terrible circumstance we're in. And the part of that plan that I want to focus on is the tax cuts.
Yes.
Not all tax cuts are equal. There are different ways to implement tax cuts. We love us some tax cuts. So I just want to know, what is our vision for the COVID tax cuts?
Well, the idea would be to get rid of very inefficient taxes. For example, stamp duty. It's a terrible tax. It distorts the housing market. It keeps elderly individuals in houses that are very large. They're not willing to downsize. They may have stairs. They would probably be more comfortable in a house without stairs that's smaller or fits their needs better. But they're not willing to do that because in order to transition to that smaller house, they have to pay a huge upfront cost to the government. So that just distorts the market. And then as a result, we've got young couples that are wanting to have kids, wanting to move into a bigger place, and they have to rent because the houses aren't available, so the housing price has gone up. There's a lack of supply. Plus, they also have to pay that stamp duty, which, again, is a huge upfront cost to the government. It's like you're saving for your down payment or your deposit, as I like to say in Australia, and you're also saving in order to pay for the stamp duty. And it undermines your ability to purchase a home.
And the issue is, because stamp duty is a payment that you need to make upfront for the property, in some ways you're actually adding on that amount of money into the debt of your mortgage, correct? So can you explain to us a little bit how that works?
Yeah, so if you've got this large, say it's $40,000 that you pay to the government, that's $40,000 that you're not paying on your down payment or on your deposit. And as a result, you're borrowing that. You're not technically borrowing for the tax, but that is money that you would have spent on your house.
Correct.
So you pay that interest over the course of your loan, whether that's 25 years or 30 years.
The whole concept of stamp duty to me always kind of perplexed me. It seems like what the government is saying is, yes, you can start to purchase this asset, but you need to give us a lot of money so that we can put your name on our computer. It says this person owns this property. That'll be, many tens of thousands of dollars. Thank you very much.
Yeah, it's just a revenue raising thing.
Yeah.
So we're proposing replacing stamp duty. And just to clarify, there's different stamp duties for every state. It's a state tax. And land tax is also a state and local government tax.
Right.
We're proposing replacing those taxes. Land tax already exists, but right now it's just for investment properties. So if you're an owner-occupier, that is, you live in your home, you don't have to pay land tax.
Right.
What this means, this is actually kind of unfair because it means that my landlord is paying land tax, and guess who's actually paying that land tax? Me.
That's right.
So that's just passed along mostly to renters, which is harder to save.
Right.
Anyhow, so we're proposing replacing them, so just expanding broadening the base.
Yeah.
So it's making it a smaller tax for more people, which distorts the economy less. And a lot of people are very worried about this. They're like, oh no, I would have to pay a tax for the entirety of me having my home. That doesn't seem fair or right. And yes, we agree with you. That isn't fair or right. But it is a tax cut because even unless you have an incredibly large home, you're actually going to will always be paying less. The median home, you'd be paying no land tax at all.
Okay.
So the majority of people wouldn't end up actually paying the land tax.
Okay.
But some people would, and it would be a small amount over time, a small annual payment. So less burdensome. The government's still collecting some revenue. Okay. It is ultimately a tax cut. And so we're pushing towards more and more tax cuts.
Sounds like a good plan to me. Hopefully the leaders of the states are listening, the ones that aren't just plunging their entire state into an absolute state of disaster and dissolution and poverty and authoritarianism,
Yes.
I won't name any names, Dan Andrews. We're going to move on now to New South Wales. And there was recently a day-long debacle that involved koalas.
Oh, the coalition.
Yeah. But I don't want to do this podcast anymore. All right, the coalition. So the Nats here in New South Wales said we're going to stop being a part of this coalition. We're going to break rank based on this koala protection scheme, correct? Yes. And a lot of people, I think, were very confused by the situation. They're like, why is koala protection the hill that the Nats are willing to die on? That seems so bizarre and so odd. So it's not as simple as that, correct? It's actually not necessarily about, no, we hate koalas and don't protect them and we're leaving. What actually happened?
It was ultimately a land rights issue. It was burdening farmers. It was burdening landowners in general. And so it's a very important issue. I think a lot of people didn't know about it. So politically what the Nats did wasn't great, but the actual issue and the actual land rights was very important. And sorry for interrupting. It also just made it more difficult for developers and for people to expand, which is one of the big issues in Australia. And when we're adding on to those development regulations and adding just another level of difficulty, it means that housing prices are going to go even further up. And
good.
I like to talk about housing prices. It's a big problem in Australia. We've got the world's one of the Sydney is the second least affordable city in the entire world.
That doesn't surprise me. Because I think we both have to pay monthly rent. That's pretty.
It's painful.
Astonishing. Well, on the point of the koalas and the protection and the land rights, what was actually being proposed was a scheme where people with large plots of land had to be responsible for certain protections, environmental protections, for the well-being of koalas. And this was an extremely burdensome regulation in which they basically have to turn certain parts of their land into habitats, correct?
Yeah.
And they would have to assure that koalas and other species are protected on their land, which is a state's responsibility, not a private individual's responsibility, and B, you were adding on to the burden mostly of farmers who are already stretched incredibly thin for various purposes, not the least of which is water rights. And so the Nats were actually saying, no, what you're doing is you're infringing on the land rights of people, and you're also overburdening.
Yeah,
landowners.
And I think a lot of these policies backfire. Like, if you don't care about koalas, it's like, no, but if you put it in the interest of the person, you're making a conflict between the person and taking care of koalas. Right now, that isn't necessarily the case. You add a law like this, and farmers are like, crap, I've got eucalyptus on my farm. I better get rid of all of the eucalyptus because then I will have koala habitat. And we saw this happen in the United States where it was the spotted owl, and the spotted owl is an endangered species. And they passed a law, I forget which state it was, passed a law basically saying, if you have a spotted owl on your property, you're not allowed to log that property. And logging property it's worth a lot of money. And if you can't log that because you've got an owl and you'd be destroying their habitat, it's going to cost you a fortune. It ruins you. Because logging is one of those industries where it's 40 years, and you wait 40 years before you can harvest, and you're finally able to harvest.
Right. An owl built
a nest.
And hey, so sorry, buddy.
Yeah. So I wouldn't. If I were a rational farmer, I would go hunting.
That's true. Like before they actually pass anything, yeah.
And a lot of people went through and they actually just logged immediately. They logged early just in case, and they ended up destroying a lot of habitat for these spotted owls, and it completely undermined. So we need to be sure to put policies that are both in favor of the animal and in favor of the farmer, so that both are aiming towards the same goal.
Yes.
When we put those two in conflict, it causes problems and isn't good for the species.
And speaking of the species, I mean, I do like to point out the fact that the koalas are like marsupials that have been around for a very, very long time.
They also have chlamydia.
Yeah, well, they do have chlamydia, but I don't know if that's contributing to their resiliency. But they have been around for a long time. They eat plants that are very plentiful and available. They have survived many forest fires, and so you'd think that these are animals that are generally pretty well off. My question is there a shortage of inhabitable land for koalas in Australia? Like, are they in danger? Are there numbers running low? Is there actually a really important reason to burden these landowners?
So I'm not someone that can actually speak very well to the actual impact on a species. This isn't my specialty. That said, there is a lot of open space in Australia.
Yeah.
There's a lot of undeveloped land. I've heard arguments that the only reason koalas have survived is because humans, and we've been working to protect them. I've also heard the argument that you just made that is like they're very resilient, they'll be fine. I can't really speak to that.
Okay.
But there is a lot of open land. Also, I think it's worth noting that koalas eat a tree that reproduces by exploding in flame. So I say that forest fires and koalas go hand in hand.
If you can survive Australia's bushfires, I don't know, you seem like Megatron to me. That's just me. We're going to move on now to quantas.
Yes.
So quantas, they're on my shit list. They have decided that they're going to announce that they're going to move to Brisbane. So after, furloughing tons of employees and laying off a ton of people and making all these apologies and saying that we're in a really tough position, we don't really have any where to go. Now they're like, oh, but we're actually going to do this thing where we're going to take our headquarters and move it to Brisbane. Our headquarters where we employ dozens of people. We're going to move to Brisbane. Are they just thinking about moving? Do they need a change of scenario, or are they looking for something else?
I think that's in debate. We have their headquarters. They're paying, I think, $40 million in rent on their headquarters here in Sydney, which goes back to affordability of land. And price of land and price of having a headquarters would be a lot cheaper in Brisbane. That said, Brisbane's also been known to give out huge hunks of money to airlines that come and make their headquarters. In Queensland, we've got, I think Virgin got $200 million from the Queensland government in order to stay in Queensland. So I think this is one of those issues. This is where crony capitalism comes in, and
Correct.
it's very different from the capitalism that we're calling for,
Yeah.
which is competition. And there should be competition among states. I think
Yeah.
that states should be competing for companies,
Correct.
but they should be competing broadly for those companies by creating good policies
Yeah.
as opposed to handouts for specific large companies.
Yes. Well, because Qantas, yes, they're going through a hard time at the moment, is not exactly a business that needs government money. If ever you had a corporation that should have enough money in the bank to fend for itself, it's a massive airline like Qantas. But, you also have the story of all of these political officials here in New South Wales scrambling to see how it is that they can keep Qantas here. Now, that could take a couple of forms, one of which could be a handout, so a subsidy, another of which could be a tax cut. Now, a tax cut, okay, maybe. If we could, that would be something that perhaps...
Again, it should be a broad tax cut, not just
Yes,
for Qantas.
correct.
If we're going to... This is the hardship with Australia is a lot of these taxes are federal. So you can't have states competing for this company by saying, hey, we're going to cut X tax, the corporate tax rate, because they're not the ones in charge of that.
Right.
But in general, I think that all tax cuts should go broadly across the board. It shouldn't be
Yes.
for one company that people like. And I think this happens a lot. We saw this with Amazon in the United States.
Oh, yeah.
All these different states were competing to get Amazon, and they're like, we'll give you no taxes. We'll give you huge amount of money.
Yeah.
And that's really not great. That's crony capitalism.
Yeah, and like Amazon needs the tax cuts. Like, how about the mom and pop shop? I think they would have way more to gain than Jeff Bezos, who is the richest man in history. So yeah, probably what they're doing is looking for New South Wales to give them a tax cut. There's very good reason for them to stay in Sydney, considering that Sydney's kind of like the hub, if you will, of Australia. Of course, a lot of people think it's Melbourne, but Sydney really is kind of like a landing dock in a lot of senses. But, I hope that New South Wales calls their bluff and says, you know what, we respect the rights of businesses to make whichever decision is best for them. Au revoir. Go to Brisbane. Anyway, we're going to finish off the podcast with a subject that I know is near and dear to you. And I care a lot about as well, because it's just pure injustice. The estate tax,
Yes.
or, as it's also known, the death tax.
Yes. So the Tasmanian government, but an economist has called for and re-implementation of the estate tax in Tasmania as a way of reforming their tax code and making it more efficient. Yes, fully support a more efficient tax code. He's also included lowering the payroll tax. Definitely support that. Definitely support getting rid of stamp duty, replacing it with land tax. But the estate tax is actually a very painful tax.
Correct.
And the reason for that is you have like these family businesses. It generally impacts family businesses where the business has been in the family for generations, or the father wants to pass it to his son, the mother to his daughter.
Yeah.
However they want to do that, and they can't. Because as soon as that family member dies, they have to pay this huge bill on an asset that isn't necessarily liquid and could be highly leveraged. So
Can I, sorry to interrupt you, but to those who don't understand what you're talking about, when you're saying that an asset isn't liquid, you mean that?
Oh, sorry. So it's not cash money. So a lot of times we have these like big numbers. You're like, so-and-so is worth however many million dollars. Yes, but that $1 million, that goes in the building that his company is in.
Correct.
That is in all of these assets that he would have to sell in order to realize that money.
So it's not cash in the bank.
That is correct. And very few businesses just keep millions of dollars sitting around in the bank because that money isn't in use. That money isn't making money for the company. So if they've got millions of dollars sitting around, that will probably go hiring new employees, to upgrading their facilities, to investing in new technology. So that money isn't sitting around. And the government comes in and is like, hey, you now owe us a giant sum of money. And this actually happened to my own family farm. My grandpa, he died unexpectedly at the age of 50. And our farm and our grassy company was highly leveraged, meaning we had a lot of debt. So a lot of businesses understand this. When you're running a business, you borrow and in order to grow. And this happens a lot. If the one that's running the business unexpectedly dies, it leaves the business in a very precarious situation. They've lost their figurehead. lost the guy that's running it, and they had a lot of debt.
Yes.
And so this is basically what happened to my family's grass seed company. They had a lot of debt. My grandpa died, and the family was left trying to pick up the pieces.
Right.
And the government gave us a nice $600,000 bill because we had a company that was worth a lot of money.
Right. But that was money. It's worth a lot of money because you had a lot of land, some tractors, some buildings.
Yes.
They were assets. But that wasn't money that you had in the bank. You didn't just have cash money sitting around.
Yeah, no.
And so what happened as a result of you having to pay that money?
Ultimately, the family had to sell. And this happens a lot. And this can happen with family homes. This can happen with family businesses, with family farms, where they don't have that money on hand. Not very many people have $600,000 sitting in the bank to just
no kidding.
pay the government. And so they sell in order to get the liquid money to pay the government. And they've lost that family legacy. And they've lost that thing that the family's been working for, that they wanted to pass down to their children.
Yeah.
I don't think that the government has any place in a family's legacy.
I agree. And it's also beyond the inefficiency or the hardship that it may cause, it's very unfair of a tax, isn't it? To say you're working your entire life to build up something that you want to give to your children. This is essentially work that you've invested that has paid off. Because you're dead, you now have to give us a chunk. That just seems at bottom unjust.
Yeah, and you've already paid taxes on all
Correct.
of this. So
Yes.
it's like these businesses and these assets, it's like if it's a home, they paid the stamp duty. If it's land, they pay the stamp duty. They've been paying their corporate tax rate. They've been paying taxes on profits. They've been paying taxes on capital gains. They've paid all the taxes. So it's just hitting them again on what has been a very slowly and painfully difficult. It's difficult to accumulate that kind of capital.
No kidding.
And people want those businesses to continue. I think that's a very natural human thing to want your kids to take over the family business.
Well, that's why a lot of us work hard. When you work hard when you're young, so supposedly when you're a little bit older, you have a nice nest egg, and when you have kids, you can pass some money along to them to make sure that they have a leg up and that they can, have a more comfortable and fulfilling life, and that their kids can be better off, and hopefully that done at a large scale leads to a more wealthy, more prosperous country with more prepared people, with more spending ability. And, the cycle continues. But on that note, and I'd love to keep on talking, but we're actually already quite over time, so we are going to say goodbye. Emily, thank you so much for joining us. To anyone who hasn't become a member, please go ahead to taxpayers.org.au. I forgot our website. Go to taxpayers.org.au and you can become a member there. Also, please subscribe to the podcast. You can do so on Spotify, iTunes, Stitcher, really wherever you get your podcasts. Also, you can get the video version of the podcast on YouTube and Facebook. This has been Taxed and Wasted by the Australian Taxpayers Alliance. We'll see you next time.
Thank you.